And Afrox reported today revenue for the first 6 months to the 30th of June up by 3% to 2.9 billion rand. And that came as the economic downturn in manufacturing, mining and steel production, all exposed for Afrox. That was deepening in the first half of the year. And we've got Chief Executive Brett Kimber with us now. Good evening, Brett. It's good to hear a company that's got reasonably good results, and be interested to know how you view them given the environment that you're operating in.
Well, David, the environment is tough. We've seen volumes decline, but we clearly supply into a lot of different industries. So hospitality, CO2, there's still strength there, and we're seeing strength in emerging Africa. So, you know, while manufacturing's down, we do see some pockets of positive.
Let's look at that there. You've got revenue of 2.9 billion, up by 3%. So how much of that is pricing, and would you regard it as actually a static performance?
The majority is pricing. We think we've managed to hold that. As I said, volumes are down, and there were a few one-offs at the beginning of last year, which make the comparison not too. So without those one-offs, we would have been stronger in the top line growth.
And then you've got well, price increases matching costs roughly, as you say. Declines among the top customers, and you've mentioned the hospitality and CO2 there, but given the economic condition generally, prospects ahead, you're not looking at growth in any of these sectors. In fact, a slow, possibly steady decline.
Yeah, and we've seen that steady decline for many years. So beginning of this year, we put in place a new structure to actually address that. So we've taken out overlap and inefficiencies, and we'll start to see that coming through in the bottom line in the next 6 months. But we had to take that structural change because of the volume.
Now, I have to ask you about what you call your new integrated operating model, which sounds wonderful, one of those business terms, but you talk about safety, you talk about efficiency, you talk about growth. All of this sounds good stuff. Any business should be doing this. So now, what is it that you're doing differently?
Well, let's start with safety. We see the direct correlation between safety and business performance. We had a lot of vehicle rollovers, so you have inefficiencies because those are off the road, so you're stressing the thing. We've knocked those down completely by doing rollover training with all our drivers, 430.
What do you mean rollover? Literally vehicles rolling?
Rolling, yeah, because if you do harsh braking and there's a liquid in it, they flip very easily. So we've trained people.
So it's peculiar to your industry, it's a particular risk for you.
And the oil and gas, you know, the fuel, trunking those. So, but yes, that's taken that side down. So we've seen safety incidents drop. Inefficiencies, part of the safety then feeds into inefficiencies. But on our supply chain, we weren't doing a good job. We had outsourced some of that. We brought that in-house. So those inefficiencies and the structural side that we did, we put leadership in around LPG, hard goods, emerging Africa, and our atmospheric gases business. So giving that leadership with experience and accountability is driving the efficiencies.
You mentioned also that a lot of your customers are affected by things that are beyond their control as well, or largely beyond their control, like labour disputes, like electricity issues. To what extent have you been affected by labour issues? Because certainly at the moment in South Africa, it's top of mind for most businesses.
Right. End of last year, we went out in a communication streak where we explained what the objectives of the business were, and we got labour to fully understand and support that. So we've had a fairly easy time in being able to actually make the structural changes and get the wage negotiations settled.
What sort of wage negotiations environment are you in? Do you do for a year, for 2 years, for 3 years?
Annually, and we've settled at 7.5%.
Still above inflation though, so, and looking at your other revenue and that 3% growth that we saw in earnings, that's again an added cost for you.
And that's why we've had to drive the efficiencies and see where the overlap is and taken that out. And we're reducing headcount where there's been some redundancies, people leaving. We've actually delimited some of those particular roles. So that will offset some of the increase in cost.
And electricity, how have you been affected by those increases, and more to come, of course?
We are a big user of electricity. We optimize our plants and we try and align with the customers. But yes, we're 300 million cost per annum as our electricity bill.
You also talk about Africa and what are you doing there for growth. And it's funny how, Brett, all the sectors we talk about now, banking, construction, mining, your sector, retail, companies are saying in South Africa we're looking at 5%, 6%, 7% growth. We're talking to Truworths a bit later. All those big retailers, it's kind of inflation linked, but not much more.
Right.
But when you look at their numbers in Africa, the numbers are much bigger. So we have a ShopRite, for example, which is steady earnings in South Africa, 27% increase when it comes to Africa. So what are you doing in Africa?
Well, 20% of our revenue there is already from emerging Africa, Nigeria, Kenya down. We're looking at the infrastructure spend. Well, firstly, it's the demographics and the wealth. So Coca-Cola is expanding rapidly, so we'll support them. Then the infrastructure build, need welding and gases. And then at the end of the day, as you get bigger mining houses going in and putting, you'll have air separation plants. So we'll incrementally grow as the demographics and the industry expands.
And are you actually setting up businesses in Africa? In other words, not just sending stuff there, you're setting up manufacturing, distribution networks and so on, so that they are self-standing businesses?
Fully integrated businesses in 13 countries already, and we're going to be expanding into those that we see as high potential too.
Well, yet another story where the growth appears to come from outside South Africa.
Yeah, we see higher growth coming from there, as you said.